Hi guys, Happy New Year and welcome back to the 4th edition of our third quarter intrinsic value market updates. So for this week's market update, we will be talking about larger companies in the US as well, namely Salesforce, Adobe, Alibaba, TSM and NVIDIA. Before we begin, here's a quick disclaimer for you. Alright, let's get into it. The first stock we'll be talking about today is Salesforce. Salesforce is an American-based cloud software company that specializes in cloud computing and customer relationship management. They are also one of the largest players in this industry and one of the market leaders as well. So this is the intrinsic value update of Salesforce. So as cloud computing is the future, I've actually put more aggressive growth rates for Salesforce. So you can see here I've used growth rates of 25, 16 and 10% respectively, and with a discount rate of about 7.7%, I've generated an intrinsic final share value of about $310, and that is about a 17.6% discount to their current share price at about $255. So this is Salesforce chart. So when we're looking at this chart currently, we can see that as most of the tech stocks, CRM or Salesforce has been tanking recently, and it has dropped from the highs of about $311, $312 all the way down now to $238. So actually we can see over here a previous area of resistance now has become an area of support for the price action at around $238, $230, I beg your pardon. And these big few slumps are results of poor earnings, and this one is regarding the downgrading by certain analysts, which led to another tanking of the Salesforce share price, citing competitive reasons. However, as we calculated earlier, we can see that Salesforce share price is actually way undervalued now, so it's actually a good time to enter. And we can see this lovely bullish hammer rejection candle rejecting all these lower prices, and the stock has begun to rebound. So I will say anywhere if you're looking to enter around this region is really good, and I've been actually buying on the way down as well, dollar cost averaging in. Yeah, so this is Salesforce. Our next stock is NVIDIA. NVIDIA is one of the largest competitors in the semiconductor space, and they specialize in the designing of graphic processing units used in gaming and automotives. So this is the NVIDIA intrinsic value. So I've used growth rates of 35%, 25% and 15% as NVIDIA is growing rapidly right now, as well as they are pursuing things within the metaverse as well. There's news and reports about that. And with a discount rate of about 8.65%, I generated a final intrinsic share value of about $334.50. And this is almost about a 10% discount to their current share price of about $301. So this is the NVIDIA chart. So if we're looking at the NVIDIA chart, we can see that and some of the tech stocks as well, it's been going down or sideways recently. And we can see here this orange line, the 100 EMA. There's an area of support here. Stock price found once, twice, and is back for a third time. And this is confluenced with a horizontal support level we can see here. Once, twice, and now a third time as well. And the stock price has rebounded, lovely bullish hammer again, similar to Salesforce, and it's currently rebounding. But there's a downtrend trend line here which might act as an area of resistance. So maybe we want to see a breakthrough of that resistance level before we consider entering NVIDIA. But we know, as discussed earlier, that NVIDIA is actually very undervalued right now, of about 10%, I would say. Yeah, as we saw earlier. Yeah, so NVIDIA is a good shout. Our third stock is Adobe. Adobe is one of the leading players in computer software for editing, designing, and developing various forms of media files. They also boast one of the highest retention rates in the world. So this is Adobe's intrinsic value. So I've used growth rates of 22, 14, and 8% respectively for the different categories, and a discount rate of 7.9%. I've generated an intrinsic share value of $594. And this is about a 5% discount from their current share price, which is around $564. So this is the Adobe chart. So like all tech stocks, it's been tanking recently, dropping from highs of about nearly $700 to $534 currently. And as all tech stocks have been tanking, as we know, Adobe is currently undervalued, but we should look for a possible reversal in the trend first, because this is a massive downtrend currently. All the averages are beginning to slope downwards, so we should look for a possible reversal in trend before we enter Adobe as an investment. But yet again, this is a sign of a beautiful reversal of trend. You can see this bullish engulfing chart pattern here, where the big green candle engulfs this small little red candle. Yeah, so it's Adobe. Our second to last stock is TSMC, Taiwan Semiconductor Manufacturing Company. TSMC is the largest semiconductor manufacturing chip company in the whole world. Some of the notable clients are Apple, who uses their chips for their iPhones as well as the other devices. They also have clients such as NVIDIA, who outsource the production of their graphic processing units to them after they have designed them. So this is TSMC's intrinsic value that I've calculated, and I've used growth rates of 20, 14 and 10%. While this is a bit optimistic because TSMC grew last year at about 12 to 15%, somewhere around there. This has generated a financial value of $125 with a discount rate of 5.5%, and this is already a premium of 2.7% to their current share price. So TSM is about fairly priced in the market right now. So this is TSM's chart. So we can see TSM chart was ranging for the longest time. 1, 2, 3, 4 resistance, 1, 2, 3, 4 support, and currently it has broken out of its range, and it's hit a resistance level and has now returned, and it seemingly has turned this area of resistance previously into an area of support currently, and it is reversed from there. And if you can see, it's actually used the blue line, which is the 20 EMA, as an area of support as well. You see, once here, twice here now, so it's currently rebounding. But a potential resistance level might be forming here at around $132 for TSM, so it might be one to look at. And as we know, the intrinsic value is around here, so it's up to your discretion whether you would like to enter TSM at this stage. Because for me personally, it's a bit overstretched from the moving average. It might be good to wait for a while, in my opinion. Yeah. Lastly, our fifth and last stock today for this market update will be Alibaba Group. So Alibaba is one of the world's largest technology companies specializing in e-commerce across their various platforms such as Taobao and Lazada. They are also currently heavily affected by the China tech crackdowns, and Alibaba presents a huge buying opportunity for investors who are interested. So this is the Alibaba intrinsic value update. So I've used growth rates of 10%, 20% and 10%. So you might be wondering why the 1 to 5 year growth rate is so low. Is because I've accounted for the fact that there are the China tech crackdowns currently, and so for the next 5 years they'll only grow at 10%, while thereafter they'll begin to recover and grow at a faster rate. So with a discount rate of 8.5%, this generates actually an intrinsic share value of $300, which is a 60% discount from their current share price at about $120. So this is a massive discount on Alibaba for investors if you are interested. I've actually done a complete analysis on why I'm diamond handing on Alibaba, and you guys can check that out right here. So this is the Alibaba chart. As we can see, it's in a long-term downtrend due to tech crackdowns, the fine on them, etc, etc, etc. And there's this big drop here, which was due to their bad earnings. So if you see this red E here, it means that they missed their earnings expectations, and that's why the stock price fell again. But recently we formed a double bottom, and we've rebounded off this pretty strongly, I feel, and it looks like we're heading on the up right now. But I would like more concrete evidence of a reversal of a trend before I'll begin again to DCA in. So obviously I'm down on Alibaba because I bought like somewhere around average price of about 140, I think 150, somewhere around there. Yeah, but we can see also Alibaba, there's a long-term support resistance level, I say at 100 EMA, this orange line here, once, twice, 3 times. And if we can actually break through this 100 EMA here that's coming up and hold, I think it's a pretty good sign of a reversal trend for Alibaba, and we can actually begin to look at it more optimistically. But yet again, as the risk with all Chinese stocks, the government can come in and shut anything down at any time. So that's a risk that we all need to understand and be willing to bear when we are investing in Chinese companies such as Alibaba. And that's all the stocks we have for this week's market update. Thanks for watching, and as this is the usual summary table that we have for you guys to refer to. We'll be back next week with more intrinsic value market updates. Please like, share and subscribe our video. And as always, may the markets be in your favor, and I'll catch you in the next one.